What's up, Mortgage Coach community? Dave Savage. Today I'm interviewing Gene Agustin. How you doing, Gene?
I'm doing great. Thanks, Dave.
Good, man. I've been digging what you've been doing on Facebook with Mortgage Coach.
Thank you very much. Thank you.
Yeah, well, I appreciate you being a leader in our community, contributing in our Facebook group. For those of you who don't know Gene, he did almost 30 million last year. What was about 28 million in production?
Yep.
Almost 100 loans. Although it was funny when I asked him about his production, he was like, embarrassed of it. He's like, we're going to do 150 this year, and we've done a lot more in past years. But, buddy, I'm telling you, that's great production. You're killing it.
Thank you. Thank you.
Good. Well, the reason I wanted to do this interview is you're definitely a black belt with Mortgage Coach. That's obvious that you believe in giving families, more than a fee worksheet. But you're also doing a really cool job of how you're storytelling with Mortgage Coach on Facebook. So why don't you just tell everybody a little bit about your mortgage practice, and then let's get into how you're using Mortgage Coach to tell stories on Facebook.
So every client that we take on will go through a Mortgage 101 meeting or mortgage planning meeting with us, whether it's in person or via Zoom. In person I like because it's just more personal, but we'll do the same presentation through Zoom. I go into telling my story, my why, and then from there we go into reviewing the total cost analysis and basically breaking down the entire process for the client. So the goal for them is to have zero surprises. So when they are ready to purchase, they're going in fully educated and fully aware of what their options are.
Well, let's hear your, I don't know how long the mortgage why takes, but I want to hear that a little bit so we get a feel for how you open the conversation with the family.
So I usually start the conversation with asking them, what my agent had said about me, and they say, oh, great things. And then I tell them, well, let me share a little bit of background about myself before we start, going into the meeting. And I always tell them, I immigrated here from the Philippines. Family was very wealthy. And unfortunately, we weren't able to bring any of that wealth with us to the U.S. So we went from wealthy to dirt poor overnight. And growing up, I always asked my mom, why did you do it? Why did we make this transition? And her response was always the same, just better education, more opportunity. And I just kept hearing that. And the reason why I always questioned my mom was because we went through such hardship that my parents actually separated. I have zero relationship with my father. That's why I'm a mama's boy. And I've watched her struggle as a single parent. And again, better education, better opportunity. So I grew up with education and opportunity just being hammered down my throat, and naturally became very passionate about it. The number one love in my life is family, and just, they're my priority. And so when I got into real estate 20 years ago, I realized back then there were a lot of great salespeople, but very few people were willing to educate and teach the process of buying. And more importantly, very few people were empathetic towards families and their struggles. So I took what I was passionate about, what I loved the most, and applied it to an industry where that level of service was lacking. And our philosophy then, which is still the same today, is to educate, empower, and to guide our clients through one of the biggest purchases of their life. Now, at this point, I tell the client, so what we're going to discover today is two things. It's one or the other. One, we're ready. From there, we're going to talk about what your next steps are. Or two, we're not quite ready, and that's okay too. From here, if that's the case, I'm going to prepare a game plan for you so we know what options or what steps you need to take so that we can get you into a house in the future. And then from there, Dave, I lead into the cost analysis.
Wow. Well, that connects emotionally from the heart. I'm sure it makes you feel great about what you do, and that shows up. So it's not only what you say, it's how you say it. And so that congratulations to you, man. You're making a difference. So let's hear how you position the total cost analysis. So when they get it, it's got context. Like what does that pre-frame sound like? And then let's talk about an example TCA.
Okay.
And then let's say, like, now how are we going to take this and put it on Facebook and make a story and a strategy out of it?
Yeah. So as I'm in a lot of what I'm posting on Facebook are real situations. A lot of times I'm not including the cost analysis link because this is for an actual client. But it's just, it could be an annual review call where, wow, this was, even for me, I'm still learning after 20 years. And when we're crunching the numbers, and it's what I love about the TCA, because it's just black and white, right? And so as I'm going through these options with clients, I'm thinking, wow, this is something we should share on social, because a lot, again, we don't know what we don't know. And so the feedback I've been getting from clients is, you know, when I'm posting, hey, this was an annual review success story, I am getting clients calling or texting me saying, hey, when is it my turn for an annual review? So for me, it's just fun. I love storytelling. I'm a big reader to my kids, and so now I get to do this on Facebook. So
love that. Love that. Well, walk us through the pre-frame of a TCA and then show it on your screen. And let's go through it. Like, how would you, before you give the link or before you pop it up, how would you describe a total cost analysis and then show it on your screen?
Oh, so I tell the clients, you know, what we're going to review now are a few options. So like if it's a refi, I'll say, hey, so we're going to look at where you're currently at now. And if we're doing some debt consolidation, I'm going to show you, you know, what that would look like. And I'll give you various options, and we'll do a side-by-side comparison. We're going to look at all the fees associated with the transaction. If we're going to do a no-cost refi, I'm going to walk you through what that looks like as well, and the benefits of doing the no-cost refinance.
And what would it sound like if it was a purchase? How would you position it at a purchase?
For purchase, I'll show them, here's what you're currently, so I always do, especially if they're renters, I always do a rent versus own analysis. So I'll show them, here's where you're paying in rent, and I remind them as a renter, you're paying 100% interest, so don't complain because rates are in the mid-4s. And I'll walk over, I'll show them, here's option one, where it's, I always like to help our clients identify what is their ideal purchase price based on their ideal monthly payment. So I always tell people, we can't control rates and the way the market's moving, but you can control your target price point. So I'll start off with that analysis first. Here's your ideal payment, and here's what your ideal purchase price will look like. And then I'll show them an option where they're paying points versus no points. And then from there, I'll show them an option, what they can, the max budget. So that way they know, well, if they want to go above their ideal, at least they know that that's an option as well. And then from there, Dave, we'll look at, I look at all the fees associated with the transaction. So I actually explain in detail all the line items. I even go over how to shop lenders. And I've had to start explaining to clients that I am a lender, because they're always thrown back by, well, why are you teaching me this? And the reason why we do that is because there's a lot of bad information out there. And so the first thing I want to do is say, hey guys, this is Mortgage 101. My goal today is just to educate you guys to be a smart shopper. So I show them how to shop lenders, and then I go through and start explaining all the fees in detail for them.
Love it. Well, let's pull up a total cost analysis. You pick which one.
Okay.
I want to spend enough time that someone learns how you walk through a TCA and how you structure it. But I really want to make sure we save at least 5 minutes to talk about, you know, okay, now when do you take something and put it on Facebook? And then when you do put it on Facebook, I want to go through a few posts and talk about, you know, tactically what you're doing there.
Okay, so you want me, I've got a refi one. Is that when you guys want to see it?
Show me whichever TCA you want, and I'll tell you when I see your screen.
All right.
Boom. See it?
Good. All right, so this is a client. Actually, no, this is the wrong one. Here you go. So this is a client that we helped buy a few years ago, and they had amassed a lot of debt over the last few years. Wife was going through some health issues, and so this was just a routine check-in call, and she started telling me about, you know, some of the changes in their lives and possibly selling the house, but more importantly, she was really feeling sick about the debt. So I proposed an option of, well, why don't we, you know, you got a ton of equity now, why don't we look at tapping into that equity and paying off some of this debt? And so under the current column, this is what they're currently paying now. So they've got $21.94 as their principal and interest. When we helped them buy 3 years ago, it was an FHA loan. So I showed her, this is what you're paying in terms of mortgage insurance. And then total debt, they're paying about $3,200 a month in debt, which was about $45,000. So the first option I proposed to them was, well, why don't we consolidate the debt? So we're going to take our loan from 453 up to 508. The interest rate, the way I structured this, Dave, was at 80. It was like a combination loan. So I think I did, I did a 452 first and a 56,000 second for them. And so I showed her that this is the blended rate between the first and second. But for this strategy here, I said, look, by us consolidating the debt, the total payments going from 5734 down to 2752. And I told her the cash savings for this option is over $2,900 a month. Now, I always remind my clients, if we're refining for two reasons. One, we're looking to improve cash flow. The other reason is we're looking to try to pay off the house quicker. It's one or the other, unfortunately. So I showed her this example. If they start taking advantage of the improvement in cash flow, and they start making that new 2752 payment, they are resetting their term back to 30 years. If their strategy is to keep the house long term and want to try to build more equity and pay less interest, that's the second or third column here, where I show them we're going to keep the same loan. However, we're going to keep making the same monthly payment. And now $29.82 is becoming a principal reduction each month. And in this case here, what I did was I just divided that $29.82 between the first and second. I showed them instead of paying off the house in 27 years, they'll have the house paid, the first mortgage paid off in 13 years, and they'll have the second paid off in 3 years. And then I went over if this
and time out. I mean, yeah, they're saving like just so much interest.
Yeah.
Keep it going.
Oh, sorry. And then over a long-term investment, again, if they're thinking this is their 10, 15, or even forever home, I'm showing them, and this is, I wish we could capture what we're like the interest that they're paying on their credit card, but we can't. So I was showing them just on interest and mortgage insurance over a 15-year period, they're paying $258,000 versus if we do the debt consolidation, but they're making the same monthly payment, they were going from 258 down to 176. And that's where my clients really appreciate the cost analysis, because prior to this, Dave, I was using different tools to kind of show the same thing. And this has been a game changer for me because it's just so black and white for my clients.
Love it. Hey, let's take a quick look at that rep versus own that you had, just because I want to see if there's any nuances in that. And then let's show some social posts and talk about how to tell stories online.
So a rent versus own.
Was one
So this was one I did for an open house. I was using this, and actually I posted this on social as well. I was using this to demonstrate to two types of buyers, either renters, first-time buyers, or to investors down in the Bay Area. And so for my renters, I'm just showing here's what you're currently paying in rent at $2,200. As a renter, you have no tax benefit, no principal paid. So your net expense is $2,200 per month. If you were to buy this house and we were to do an FHA loan, here's your monthly payment, $3,287. And I go over, naturally, you're thinking, oh, wow, my payment's going up $1,000. But then I remind them, as a homeowner, you've got your tax benefits. So depending on your tax bracket, here's what your tax benefit would look like. And when I'm doing a mortgage planning, you actually go in depth about that, about connecting them with their CPA, about how to bump up their withholding so they can take home more cash each month. And then I go over a principal paid, and I remind them that principal paid is like a long-term savings account. The more they pay down towards principal, the more they're putting into their savings. So when they sell the house, they're getting that money back. So I go over their net benefit. You're going from $2,200 down to $2,174, which is $25 cheaper than what they're currently paying in rent. And then option 2 in this example is if they did a conventional 5% down, and then I'd walk them through the break down the fees in detail for them. Love
it. So guys, I mean, this is powerful. I did an interview with Kevin Watson on Friday. I'm going to put a link down below. He spent 20 minutes walking through what I call an amazing first-time homebuyer conversation. And I know yours is amazing too, but be sure to check that out. So let's take this now, and let's say you've done this and you want to tell the story on social media. So let's look at some of the ways that you've taken some of these stories and pushed them onto Facebook.
Okay. So this was this was on Freeport Boulevard. This was an open house that I did on the 11th. And so I basically took a snippet of the summary and a snippet of the cost savings over 5 years. And then I just posted a video and basically just talked about what the numbers look like. So if someone watched the video, they'd have an idea that, here, this is FHA conventional versus option 3 and 4, as if you were an investor. So I basically walked them through the analysis.
Now, you said snippet. I want to make sure we're breaking this down. Did you use Snagit? how did you take the snippets just so folks
Uh,
know how you're doing it?
yeah, I use it's a snipping tool. So I'm on a PC, so it's a snipping tool that allows me to basically cut images and save those images as JPEGs.
Cool. Everybody, I use a product called Snagit. I'm not saying it's the best, but I've been using it for a long time, and it makes it easy just to, snag images on your computer, turn them into pictures, and clearly that's what you're doing is you're turning, those Snagits into photos, and then it looks like you also integrated a video, and then you also put a link to an actual total cost in the post.
Yep.
One pro tip I'm seeing a lot of mortgage coach users do is, put that mortgage coach link in the post, but also put it in comments, because that is a call to action. At the end of the day, you want, all your Facebook friends, all your realtors, all your past customers to know that, hey, you do business with me and you get this total cost analysis, this personalized, localized, digital, break-even analysis if it's a refi, or this digital purchase options analysis, or this digital rent versus own analysis. You want to make sure that you get all your Facebook friends to know that you got the goods. Any like, what kind of results do people, is it usually they private message you? How are you, getting folks and turning them into leads off of Facebook?
They'll private message me on Facebook. A lot of them will shoot me a text message asking, hey, when's my annual review, or where's my quarterly call? So yeah, every client that we take on, we try to make sure we grab them on Facebook so that they see this kind of stuff. But yeah, a lot of it just clients reaching out to me saying, hey, we like the information, and they'll share with me what's going on so I can help prep an option for them.
Well, you're doing a great job. Any other posts that you want to speak to or share with the mortgage coach community before we wrap this up?
Let's see. Sorry, I got a lot of food stuff here, guys.
That's okay. That's okay. We get to, that's the other thing is I feel like I know you, I know that, I know your hobbies. I know you're a family man. I know that you provide great mortgage advice. And so people get to know you as a human being and as a mortgage professional. So I love the way you're doing that.
Awesome. Awesome. So this was one of the first posts that I did that, this was a few weeks ago where everyone was talking about how low rates were and whatnot. And so I just thought I would share this where, people were thinking, well, I might have missed the opportunity because rates have gone up. And so I shared this post that say, rates, if you're on a lot of first-time home buyers, they fall in love with their FHA rate, not realizing that they have this PMI that's tied to the loan forever. And so I shared this, trying to remind these guys, don't fall in love with your FHA rate. At some point, we have to flip you from that FHA onto a conventional. And yes, the interest rate's going to be higher. However, we're getting rid of that PMI. If we apply that same payment, we can help build more equity or pay off the house quicker. So I did this just to remind people that don't fall in love with your FHA rate. This is not a loan that I want you on forever.
Yeah, and I love the way you also took a screenshot of Rate Watch. So, you use total cost analysis, Rate Watch, video, telling stories on Facebook, or using Mortgage Coach as an educational tool. Well, let's stop sharing your screen. Let's you and I wrap this up around just a couple last scripts. So Gene, first of all, you're killing it, bud. Keep doing what you're doing. If you could share, I don't know, once a month, whenever you're feeling like it, share some of this stuff in the Mortgage Coach group, because we want to see more loan officers telling great stories and explaining strategies using modern media. I would love to get some scripting on how do you teach and train your realtors to refer you uniquely, knowing that you're not just delivering fee worksheets and closing costs, you're providing a total cost analysis. Is there any scripting or training that you're training your realtors on?
I tell my realtors, like, you're a reflection of who you refer your clients to, right? And so if you're using someone at a big bank, and nothing against big banks, but most of what I've experienced with big banks lenders is that they're just transaction oriented. They're not giving that level of service that we give. For me, my number one product, or my only product, is experience. And so whether it be, sign as the clients come into my office, a menu, I'm really selling that experience for my clients. And I tell my realtors, like, do you want to be known as a realtor that, values the importance of a really good experience, or do you just want to keep churning and burning these clients and not getting any repeat business? And so I always invite my realtors when I'm doing a mortgage planning meeting with a client to come to attend, just so they can experience firsthand what their clients are going through with us. And they see night and day, like, wow, because I even go in depth as far as talking about supplemental taxes, Dave. I always tell people there are 3 phases to buying: the before, the during, and the after. I'm going to answer all the questions that you have, but more importantly, questions you haven't considered yet. So there are no surprises for the life of the loan if you're working with me.
Love it. Love it. So guys, takeaway there is make sure realtors experience your borrower experience firsthand. That has come up with Jeremy Forcier. That has come up with Tim Brahim. I just interviewed Wally Elderberry today, and Wally talked about how every time he gets a referral, he trains his realtors to do it with an email. And, here's the email you use to refer me. So be very intentional about that. So Gene, any last words of wisdom before we wrap up today's interview?
Dave, I love your guys' software. Thank you guys for making me look really good, and I'm honored to be on the show with you. So thanks for inviting me today.
Thanks for having us, or thanks for being here. So guys, if you got value, give this a like, whether you're on Facebook, whether you're watching on YouTube. Take a minute. The takeaway you get, like it, share it with your mortgage friends. I am dedicated to your success, helping you optimize both your production, your profits, and just your personal productivity. So make sure you tune into our Facebook group, like it. If you haven't already subscribed to it, subscribe. Make sure you're active in our Facebook group. And Gene, keep it up, buddy, man. Keep doing what you're doing, and you're helping make the whole community better.
Cool. Thanks, Dave.
Take care, brother.
All right. Bye, guys.